Hi guys, in this video I'd like to explain journal entries. This is the first problem with different examples. Right. I think you have already known about debit and credit rules. Real account rule, personal account rule, nominal account rule. Now you have to prepare this format: date, particulars, LF means ledger folio, debit and credit. Journal of John. Why Journal of John? Here the problem says that John started business, means John is the proprietor. John started business. Now we should think that we are John right now, because we are writing the journal entries. Whenever you are writing the journal entries, you have to think that you are the proprietor. Then only your journal entries will come correctly. Now, let us start one by one transaction. John started business with cash. Means we started business with cash. What is coming into our business? Cash is coming into our business. According to this rule, debit what comes in, cash is coming in. So cash account is to be debited. Now, for the credit, you have to question the down one. What goes out from the business, from our business? Here, nothing is going out from business, but this cash is coming from our house. It means it is our investment. This investment from our house into our business is called capital. So you should write capital account, credit. Narration. You might be knowing how to write the narration. Simply, you have to use the word being. The word being. Being is to be placed here. Being started business with the cash. Like that you can write narration. Now, coming to the second transaction, means April 2nd. Purchased goods for cash, rupees 20,000. We purchased goods. What is coming into the business? Goods are coming. Debit that. But instead of writing goods, you should write purchases account. Purchases. Whenever you purchase goods, you should call them purchases. Purchases account. Debit 20,000. Then immediately for credit, what you have to question? This one. What goes out? What goes out means when you are purchasing goods, cash is going out. Cash is going out. That's why cash account is to be credited. Next, third one. Purchased goods for 30,000. Purchased goods means we are receiving goods. So, debit what comes in. What is coming into the business? Goods are coming. That's why again purchases account debit. What is going out? Cash is going out. But you may have a doubt here that in this transaction, purchased goods for cash. In this transaction, purchased goods simply mentioned, but for cash is not mentioned. But you should assume that goods are purchased for cash. If the name of this supplier is not given, we should assume that the goods are purchased on cash basis. So, goods are coming, cash is going. That's why we have written here to cash account. Then coming to fourth one, purchased goods from Tom, rupees 15,000 on credit basis. What is coming? Goods are coming. When goods are coming, purchase account is to be debited. So, purchase account debit. Then what is going? going out of the business. You have to question. See here, purchased goods from Tom on credit means we are not paying any cash right now. Credit means we will pay this amount later, not at the time of purchase. Now what happened now? We are not giving anything. Then you have to question the right one. Second, shift to the right column. See, when you don't get the answer for what goes out, you have to question who is the giver? Who is the giver here? Who is the giver of these goods? Tom is the giver. Simply, Tom's account is to be credited. Very simple rule. When you don't get this answer, shift to the right and write the other party's name. Very simple. Next, purchased goods from David, rupees 10,000. In this case also, we purchased goods. Goods are coming in. So when goods are coming, purchases account is to be debited. So purchase account debit. Then what is going out for credit? Debit is over. Credit. What is going out? Nothing is going out. We have to conclude. How? Purchased goods from David. Here the name David is given in the transaction. What is the reason behind giving his name? Because it must be on credit basis. Otherwise, name is not to be given. That's why we should assume that, or we have to conclude that it is on credit basis. So we purchased goods, but you are not giving any cash. When you are not giving any cash, nothing is going out. Then who is the giver of that? Obviously David. David. So write David's account. Then sold goods for cash. We are selling the goods for cash. It means we are receiving cash. Cash is coming. So debit, cash account. What is going out? Goods are going out. When goods are going out as sales, you should write sales account. Here for goods I have used two different names. When you purchase, purchases account. When you sell the goods, sales account. Two different names. Next, 25,000. Seventh one, sold goods rupees 20,000. 20,000. Sold goods. What happened? We are receiving cash, we are giving goods. But there is a doubt. Here for cash is not given. Here for cash is given. Here for cash is not given. Even though for cash is not given, we should assume that it is for cash. Why? If it is on credit basis, then the name should have been given in the transaction. Since the name hasn't been given in the transaction, we should assume that it is on cash basis. That's why we have to write cash. See here, sold goods 20,000. We are receiving cash, we are giving goods. That's why I have written sales. Now, sold goods to Jock, rupees 15,000 on credit. What comes in? Nothing, because we are selling the goods on credit basis. When you sell the goods on credit basis, you are not receiving anything. Instead of that, Jack is receiving our goods. He is the receiver. So, what comes in question for this question, answer is nothing. When nothing answer comes, you have to shift to the right. Who is the receiver of our goods? Here, Jock is the receiver of our goods. So you must write Jock's account. Eighth, Jock's account. How much? 15,000. 15,000. 2. What is going out? Goods are going out. Sold goods. When goods are going out as a sales, then you must write sales account. Sales account. 15,000. Ninth, sold goods to Sony. Here also same thing happened. Even though it is not mentioned on credit basis, we should assume that it is on credit basis because the name is given. That's why Sony is receiving our goods, we are selling them. So you must write just like this entry, Sony's account debit to sales account. Date is 9. Then coming to this, furniture purchased. Furniture purchased. What is coming? Furniture. Write that one. Furniture account debit 5,000. 5,000. 2. What is going out? Will the furniture comes free of cost? No. We have to pay cash. Cash is going out. To cash 5,000. Sony's transaction 30,000. Then cash paid to Tom 14,000 on his account. Who is Tom? Tom is our supplier. Previously, we purchased goods from Tom for 15,000. We have to pay him 15,000. Out of that 15,000, now we are paying 14,000. What is coming? Nothing. What is going? Cash is going. It is credited. Then who is receiving that? See, Tom is receiving. So, 11th. Tom is receiving. So, Tom's account debit to what we are giving? We are giving cash. So, cash account 14,000. 14,000. Cash paid to David. Cash paid to David 9,500. Are we receiving anything? No. What comes in means nothing. Then who is the receiver? David is the receiver. Write his name. Put the date 12. David. David's account debit. Don't put the amount right now. We will write later. See here. Cash paid to David 9,500 for final settlement. For final settlement means hereafter there won't be any due to David. The who is David? The why we are paying. You have to see this. Purchased goods from David 10,000. Previously, that is on 5th we purchased goods from David for 10,000 to clear that debt. Debt means amount due. That means we have to pay. We have to pay 10,000, but we are paying only 9,500. For final settlement, whenever for final settlement is given in the transaction, in future we are not going to pay him. we should think that we are paying the entire amount. How much amount? 10,000 we are paying. We should assume like that, but we are not paying that. So here what happened? Not 10,000, I'm sorry. Yeah. Yes. Cash paid. Cash paid. Yes. 9,500 we are paying, but 10,000 is the original due amount, and we are retaining 500 rupees with us. That is our gain. Here three accounts are involved. One is a debit account, the other one is cash account, and also the discount received. How we have to write here? We should write like this: debits account debit, to cash account to discount received account, discount received account. How much cash we are paying? 9,500. Put in the credit column. Now, how much amount we are retaining with us without paying? 500 rupees. That is our gain. So we have to write here 500. Now, how much we have to think that we are paying? We have to think that we are paying him 10,000. Like this, you have to write this type of journal entries. Now 13th, cash received from Jock, 14,500 for final settlement. How much we are receiving? 14,500. 13th, cash account debit. Why cash account is debited? Because we are receiving it. How much? How much means 14,500. For final settlement means hereafter we are not going to receive any amount from Jock. What is the actual due amount from Jock? You have to go back. Going back, Jock's amount is 15,000. Right, we have to receive 15,000 actually, but we are receiving only 14,500 for final settlement. Remaining 500 we are not going to ask him. That is our loss. So loss must be debited here, which is called discount allowed debit. This is the name of the loss. When we are losing any money from with any person that you don't pay, you just keep it with you, then we should call it discount allowed. We allowed. It means we have given the permission to keep our money with him. 500 to who is giving this cash? Jock is giving. Jock. How much we should think that he is paying? We should think that he is paying total amount, that is 15,000. Now, now coming to 14th transaction, 14th date. Cash received from Sony on her account. We received cash. So what comes in? Cash is coming in. So debit cash account. Date 14th. Cash account. Cash account 15,000. Let's go back to Sony once again. Sony, where is Sony? Sony, 30,000. Sold goods to Sony, 30,000. Out of 30,000, Now she is giving us only 15,000 cash received from Sony. Here we did not mention final settlement. When final settlement is mentioned, the difference should be treated as a discount. Since it is not mentioned final settlement, no discount allowed or no discount received. You should remember it. There is a difference. On account, final settlement. Whenever final settlement word is given, the difference is treated as discount. On account means no discount. So 15,000 we are receiving from whom? From Sony. Sony is the giver. So Sony's account 15,000. Here debit. 15th transaction. Goods returned from Tom. From Tom, goods goods returned to Tom. We are returning goods to Tom. Tom is receiving. He is the receiver. According to that rule, Tom should be debited. Tom, account, debit, 1,000. Date, 15th. What is going out? Goods are going out. Goods are going out. Which goods are going out? The goods which we purchased previously. So, these goods are given a special name, that is purchase returns. Purchase returns. See, we might have already purchased goods from Tom. Purchased goods, Tom. Those goods we are returning. That's why we have to write purchase returns. Purchase returns. 1,000, 1,000. Goods returned by Sony. Sony is returning goods to us. We are receiving goods. What goods are those? The goods which we sold to Sony previously. So those goods are called sales returns. We are receiving sales returns. So 16th, sales returns. 5,000. 5,000 to from whom? From Sony. From Sony. Insurance premium paid. Insurance premium means expense. When you take an insurance policy for your goods, we have to pay some premium yearly once. That amount will not come back. That's why premium will not come back. But if any loss occurs, the entire value of the goods, for how much the goods are insured, that will come. That is a different issue. Now we are paying insurance premium which won't come back. It is an expense. Whenever you see any expense in any transaction, you have to go to the nominal rule. Debit expenses. Expenses. 17. Insurance premium. Insurance premium account. 2,000. What is going out? We should assume that cash is going out or our bank balance is reducing. Since I have not mentioned anywhere here bank, I am assuming that cash is given. To cash account 2,000. Now carriage inward paid. Carriage inward means when we purchase goods, for carrying those goods to our premises, we have to pay some amount. That is called carriage inward. It is an expense. Means it won't come back again. That money won't come back again. So it is an expense. Since it is an expense, expenses account is to be debited. 18th, carriage inward. Carriage inward. 3,000. 3,000. What you are giving? Assuming that you are giving cash, cash account. Cash account. Carriage outward. Carriage outward means when you sell the goods, sometimes you promise the customer to deliver the goods at their house. In that case, the carriage amount, the transport amount, what you have paid is called carriage outward for delivering the goods. Right. That is given a special name, that is called carriage outward. Amount is 4,000 to cash. We should assume that we are giving cash account. You can't club these two items. This is different, this is different. Inward means when you purchase the goods, you pay carriage inwards. When you sell the goods, you pay carriage outwards. So we need to maintain two different accounts for these two items. Now, brokerage paid. Brokerage means mediator fees. For connecting the people, some mediators will be there. So for that, brokerage is paid. This is also expense. So this brokerage account is to be debited. Okay, ink is over. Now, here brokerage account is debited. Brokerage account debit to cash account. Now, commission received. We received commission, means receiving cash. Cash account debit. What you are receiving means cash. Why you are receiving? Because you have given some service. You won't give back that money to the person who is paying that. It is your income. Since it is an income, according to this rule, income account is to be credited. Yes, I have got the marker here now. For this, brokerage account debit to cash account. Cash account. How much is that amount? 1,500. 1,500 over, then commission received, means cash we received. We are assuming that we are receiving commission in the form of cash. So cash account debit according to this rule. What comes in? Debit. Cash account debit. How much? 500. Why we are receiving this commission? We have commission means if we give any service to any person, we take some money. That we can call it commission. So we might have given some service. That's why we are receiving 500 rupees, and it is an income to us because we are not giving this 500 to the person who is paying that. That's why we have to put this amount in an income account, a special name, income. Commission account. Commission account. Generally, students make mistakes here. Commission received means They debit commission account. I've seen many students wrong. We received cash. Why we received cash? Because we have given some service. The amount which we are receiving is an income and it should be given a special name, that is commission. So some cash is received in the form of commission. So cash account is to be debited and the commission account is to be credited. Now, lastly, salaries paid, rent paid, both are expenses. When these both are expenses, we should debit them. 30th, salaries, account, debit, and rent also expense. Both expenses can be written in one journal entry, which is called compound journal entry, rent account debit. Salaries is 10,000 in the debit column, rent is 5,000 also in the debit column. Totally we are paying 10,000 plus 5,000, 15,000 cash is going out. Cash account 15,000. This is the way you have to write the journal entries. I am going to give some more examples in different problems. Problem number 2, 3, 4, like that. Maybe I'll cover almost all the transactions. You just keep following me. Please subscribe